Hey, welcome back once again to Overnight Accountants course, Realtors and Reducing Taxes, but I'm sure you know the title by now, Expenses on Schedule C. Now this is part 2 of other expenses. Actually, I hope there would only have been 2. I was planning on only having 2 parts of other expenses. I think I may have mentioned it in the last section that I only have 1 more section left. However, it was too long, too much information, so I had to break it down into 2. So there's actually going to be 3 parts of other expenses, and now you're in part 2. If you recall, these are you'll find these expenses on page 2 of your Schedule C. The total on line 48, and that goes to the front of your return. You'll see that on line 27A, other expenses. Just in case you're using your software and you want to check it out and see where it sent your other expenses, it's going to be on page 2. If there's too many, you probably have a supporting schedule. Also, if you turn these items into your professional and you want to look it over, that's where you'll find your other expenses. This session, let's discuss continuing education, which you're going to have. You want to be an effective real estate agent, but also if you need to keep your license, which I'm sure you do. Most states, most accounting association boards, most accounting boards are going to require you to get a certain amount of continuing education, if not every year, every couple years, to keep your license. So that would be deductible as a continuing education expense, but also classes that you need to make you a more effective real estate agent. So classes to increase your skill and make you become more effective. This could also include, believe it or not, continuing education could include books that you purchase online or that you purchase from the bookstore. Make sure you keep those receipts and use your business account or your business card for those purchases so you can track them. Oftentimes they're overlooked because you're at a place and you're out shopping, you see something that might make you a more effective real estate agent, and you use your wrong account to do it, you lose the receipts, you don't get the deduction. So just keep that in mind, plant a seed there for future use. Books on sales, anything related to business, selling real estate, even things tangentially related to your business and directly related to your business that you could possibly make you be a more effective real estate agent to maintain or improve your job skills would also be deductible. These could be classes on how to be a more effective business owner. For example, we have the 5 pillars of business success, and we don't have them out now. They will be out very shortly, probably a 2-hour course on our longer seminar on 5 pillars of business success. That would also be deductible because why? It helps you maintain and improve your job skills and become a more effective real estate agent. Seminars related to your profession would also be deductible with continuing education. Now these can be related to other areas, not just real estate, but anything that you could say was a ordinary necessary business expense to help you be a more effective real estate agent would be deductible. Now remember to ask why, and the reason I say that, and I've said it so many times in this course, is that, for example, if you take a seminar on marketing real estate, that could really be more of an advertising expense. So you may want to record it as an advertising expense as opposed to continuing education. Honestly, you could probably do it both places, but if you pile too many of these items in one category, we don't want to make your return overly heavy in one area versus other real estate agents because we don't want to get you kicked out for a potential audit. You're getting your return looked at, but we do want you to get every deduction you're entitled to. Another example would be this class. This class is helping you minimize your taxes on your tax return. And if you remember, getting your taxes prepared by a professional will be a professional fee. Now, we're not really providing tax advice. We're providing you information to help you return, or to help you minimize your taxes. But it could also be, this could be considered a professional fee, or it could also be an education expense, would go in the area of continuing education as a deduction. Now, we're going to throw this in there also just to remind you that the classes that you took for your real estate exam or your brokerage exam really aren't deductible. I've said this several times during the course. Just want to remind you again because so much misinformation about this. Because these classify you, or these courses help you become a new profession or help you enter into a new occupation rather. So they're really not deductible on your tax return, not even as a startup or an organizational expense. Now, however, I want to have one little caveat here to everything I've just said, or something to help you. Even those courses that you took to possibly take the exam or to prepare you for your real estate exam, they could be deductible if they qualify, not deductible rather, I'm talking about a credit here, I'm sorry, the lifetime learning credit. If they qualify for the lifetime learning credit, you could be able to get a credit for them on your tax return. Separate from this course, we're not going to go into it. I just want to make sure you know it exists. If you're a new real estate agent, possibly those those classes that you took to become a real estate agent could be deductible there. And also any other classes you take, it could benefit you, depending on your income level, to claim them as a lifetime learning credit if they qualify, as opposed to just deducting them on your return. The credit is worth 20% of whatever you spent on the course. You cannot claim both the deduction and the credit. However, and this is what's probably going to keep most of you from being able to claim the credit on a lot of these expenses that you have, continuing education, is you must take the classes at an accredited institution. Basically, that means for all practical purposes, that's going to be a university or a college type setting. Somebody that's able to take financial aid from the federal government is roughly, a rough approximation of an accredited institution. You can go to the IRS website, even if you want to look up a lifetime learning credit, they'll have a list there of the types of institutions that you can claim this credit from. Now, the credit may actually benefit, as opposed to deduction, lower income folks. So if you're new to real estate, just started making some money, you may want to roll it both ways, because that 20% deduction, a 20% credit rather, where they actually pay you back some of the money you spent, may actually benefit you more on your tax return than claiming it as a deduction. However, as your income gets higher, at some point the deduction is going to far outweigh the benefit of claiming the credit. But you want to run it both ways, particularly when you're new to the profession or you had a slow year, to see which may benefit you more. Get a professional to help you do that. Hopefully they'll be able to run the numbers both ways and let you know which is more to your benefit. So as we move on, let's discuss credit card fees. Now, credit card fees, we want to remind you, are really for your business card only. So make sure, as we discussed in the beginning of this course, you're only using one checking account, one business account for all your business expenses. And then also, if you do use a credit card or a debit card, you only use one credit card for your business. Now, generally when we talk about credit card fees, if you're a retailer, this is going to be very rare for folks in real estate. It generally applies to folks that accept credit cards in their business. This would be what's called a fixed rate or a discount fee, where usually it's like 2.5% to 3%, or whatever the credit cards that you run through your machine during the day or during the month. The credit card company will take a percentage of that as a fee. That would be called a fixed or a discount fee for accepting credit cards. That would be deductible here. However, that's not what for most of realtors, that really isn't going to apply. What we're discussing about here is going to be your late fees that may show up on your credit card statement because you paid late, possibly fees for cash advances. Maybe you went over your credit limit on your credit card. Remember, all those items are deductible, and if you're not tracking them on a regular basis, or at the end of the year going back through all those credit card statements, you may really lose these deductions, because oftentimes you're not going to put this into your bookkeeping system because it's going to be right on your credit card statement. You're probably not going to record it. Replacement card fees would also be, you lose your card, you need to get a new one. Look at your statements, as I said, and track the charges that are on your credit card. Remember, $250 in fees saves you up to $108 in tax. So track every deduction you're entitled to. Most annual fees are also deductible. So if you have a card like an American Express card, for example, that requires you to pay an annual fee, if they still do that, that will be deductible. Remember to deduct it. Interest, however, on your credit card, you need to track separately. Interest is recorded as interest on line 16B on your Schedule C as an interest expense. So this section, let's discuss dues and subscriptions. Now, these here are going to be very common in real estate. These are going to be professional membership fees that you need to pay for your different associations, such as Board of Realtors, of course. Maybe you're a member of your local Chamber of Commerce. For a while there, several years ago, or quite a few years ago, there was a lot of debate on whether Chamber of Commerce dues were really an ordinary necessary business expense. Now they are pretty much considered universally to be. So if you are a member of the Chamber of Commerce, do take advantage of the membership. It's a good way to network with folks, and also remember that you can deduct it on your tax return. If you're a member of different business membership leagues, if you're different leagues in your community that are business-based and not really entertainment-based, those would be deductible. Civic organizations, even like Rotary, as your largely business-based organizations, those can be deductible on your tax return. And also remember, any networking group, there's a lot of them out there. I was a member of a BNI for a long time. I don't know if you have one in your area, but I was a member of our local BNI in several different locations. Good way to network, good way to meet people, and also deductible as an advertising expense, not necessarily dues and entertainment. So remember, always ask why. What was your purpose in incurring this expense? It'll help you understand where to put it on your tax return. So let's go over some items here that are not deductible, which we probably highlighted earlier and largely probably in the entertainment section of the course. But organization whose purpose is to entertain or provide entertainment facilities for its members are not deductible as dues and memberships or dues and subscriptions. Of course, this would be a classic example, golf and country clubs. So if you have a membership at the local golf resort, it's not deductible as a dues or subscription. Pools and gym memberships, not deductible, even though you might find some clients at these places. Those are not deductible. Boat and hunting clubs, not deductible. Running, tennis, cooking, shooting, any type of club that's like that, is really not going to be deductible as a dues and subscription expense because they offer recreation and that sort of thing. However, remember, I might bring this up here in a few moments, but remember that any additional expenses that you have, say you take some clients to a golf course and it's tied into a meeting, that could be deductible. The additional expense of taking them out to the golf course and the meal could be deductible as a meals and entertainment expense. Go back and revisit that section if you're in that situation. Subscriptions could also include trade journals, anything related to real estate, professional magazine, sales-related publications that help you be more effective at your job. Decor and presentation magazines, if you're setting up homes and helping the sellers make their home more presentable for sale, anything that helps you be more effective at that, of course, is going to be an ordinary necessary business expense. So don't forget some of those items. So if it helps you in your business, make sure you can deduct it. Make sure you can show the business purpose in that. Make sure you can show how they help your business make money. That's kind of the key here. Okay, so that's it for this section. So this section of other expenses. The next section should be our last section of other expenses and very close to the last section of the course entirely. So thank you so much.